name is Anne. Lovely to have you here for our business tax revision session. Today we're going to have a look at task number 9, which covers trading losses. Now, trading losses task is worth 8 marks, gives you about 9 minutes to complete it. So as you can see, not terribly long. The task briefing there is like a set of revision notes. It will help you with any areas that you feel a little bit weak on. I'm not going to review it with you, but it is there for your reference, either to pause the video and have a look at now, or to maybe review after the session if you find the numbers a little bit tough going. I think actually with losses, the reference material is very, very important. I think it's probably important with most things in this unit, but section 7 of the reference material sets out the rules for dealing with losses. So the first thing I would need to know from a question is whether I'm dealing with the loss of a sole trader or whether I'm dealing with the losses of a company. And from there, I can decide which column I need to be in, and I can look at the different loss relief options. So let me just leave that on the screen for now. Let's go back to the question and see what is required. So here's the example we're going to be practicing, which is Sapphire Limited. So I'm dealing then with a company. So Sapphire Limited has the following results from the last 2 years of trading. I've got December 2024 and December 2023. Important to see what order they're shown in. It doesn't necessarily always show the earlier year first and then the later year second, as you can see the opposite way around here. So my latest year is actually the one in the first column. So a few things that I want to note immediately here, other than the fact that we are dealing with a limited company, and other than the fact that December 24 is written out before December 23. As I read down that, I see I have a trading profit stroke loss in December 2024. So all this information in the reference material is under the heading trading losses. So everything in the reference material is relative to this, because this is my trading loss. I would treat that as being nil in my actual TTP calculation for the year. And what I like to think of here is I effectively create a voucher. Imagine that we put this loss onto a gift card and we can redeem it in various different ways, which the reference material sets out for us. So I report no profit on my tax return in that year. I've then got this little gift card with my loss sitting on it, and I'm going to choose how I'm going to use that loss as time goes on. I am told that Sapphire has a policy of always claiming for their losses as soon as possible. The other very, very important point I want to make is that because my loss happened in December 2024, we would call December 2024, for the purposes of losses, the current year. So if we talk about making a current year claim, we mean in December 2024 because that was the year of the loss. So the current year is the same as the year that the loss was made. So I can see that I've got the chargeable gain, I've got some gross interest, I've got some donations. Looking at December 2023 then, I had a chargeable loss. Not uncommon in questions that you might have a trade loss and a chargeable loss in the same question. Now that is not covered in the reference material, so I have to learn the rules relating to chargeable losses. I'll run through those with you now, and then we'll start to think about what is happening here. Now it does tell me that they have a policy of claiming their loss relief as soon as possible. I do then have a series of questions about that loss relief, but I'm tempted to just do what I think is the best thing to do with the loss and then come back and deal with the questions. So I'm just going to look at the reference material and see what it says. It says for companies, any losses that are not relieved in the current accounting period or the previous 12 months are carried forward. And I can make an election to set them against profits in the future. So carrying them forward into future periods is an option, but the question was quite clear. I want to use my losses as early as possible. So I think using them in the current year is perhaps what they're aiming for there, or carrying them back. So let's see what the rule says. It says we can elect to set our trading loss against current accounting period total profits. So I can set my loss against the current year total profits. So that's income from property, it's any gains that I've got, it's any income from interest, all of it. Any income from any source, I can cash in some of my gift card to use it against income in the current year. That will mean that donations will remain unrelieved, so I won't have any income left to cover my charitable donations. I'll show you that in a second. Then it goes on to say, and this is a really important word here, if the above election is made, we can also carry back the trading loss to set against the total profits of the previous 12 months. So this is a very specific order. Firstly, we have to do a current year claim. Once we've done the current year claim, then we have the option of doing a carryback for 12 months. That's different to the rules for sole traders. I'm not going to get into those now because it will just confuse the situation, but be aware the current year and carryback is different for companies and for sole traders. So if they want me to make my loss relief claim as soon as possible, then ideally they want me doing the carryback because that's the earliest claim I can make. But I can only do that if I do the current year first. But this would be the preference rather than a carry forward, which is not really as early as possible. So what I've done in my notes here is I've actually just done a little screenshot of that with a little bit more room for me here, so I can put it together in a bit of a pro forma for you. So we've got our December 24 year and our December 23 year. So I'm going to set out what I think we should do with the losses, then I'm going to translate that into answering the question. So I start off with a summary of all my income. So trading profit, I'm going to write nil. There is no profit. Yes, there's a loss, but I don't put it as a minus figure in my work in here. I just say nil, and I know that it's loaded onto my gift card. And I've got 14,700 in 2023. The next thing I know about is the chargeable gain or loss. Now, I did mention the rules for this are not in the reference material. I can tell you what they are. In relation to a capital loss, first thing you would do with a capital loss is offset it against any capital gains in the same year. So if you had a capital gain and a capital loss in the same year, the loss offsets the gain. So firstly, offset against capital gains in the same tax year. If you do that and you end up with a loss left over, which is what happens here, no problem. We've just got to then decide what we're going to do with that loss. So firstly, offset against any other capital gains in the same tax year, and then following on from step number 2, any net loss that is remaining should be carried forward and offset against future capital gains. So offset it to start with against gains in the current year. If there aren't any, or maybe I've already done that and I've still got a loss left over, carry it forward and offset it against a capital gain in the future. Which means I would report a nil capital gain in 2023. Load that onto my gift card. I would then offset that 3,500 of loss against the gain in the 2024 year. So that would leave me 1,500 still to be taxed. But at least I've managed to use the loss that I'd got from the previous year and bring that gain down a little bit. So I'm going to include a gain of 1,500 there because I have dealt with the capital loss and this is the gain that is left. I've then got some interest in both years. And I've got some donations, qualifying charitable donations. I can only use those if I've got some profit left. I'm going to need to think carefully about those. Let's not rule off there actually yet. Okay, so next thing I'm going to do then is think about the loss. The rule was we have to use the loss in the current year before we can do a carryback. So in the current year, let's have a look. I've got income of 1,500. I've got income of 1,700. So that would be 3,200. I could use 3,200 of my loss. It would bring my TTP down to 0. But it would mean that my donations were effectively wasted. Because those donations can only be used to reduce my income. And there's no income left. Because the gain and the interest together came to 3,200. The loss, I've used 3,200, which I have to do. I have to set it against total income. So then I've got no TTP left and therefore no profits with which to relieve the donations. So the donations are still made, the charity still gets some money, I just can't use them to make my tax bill any lower. But my tax bill for this year is 0 anyway, so it can't actually get any lower, can it? So my loss was 49,600. I've now used 3,200 of it. So 3,200 used. It was 49,600. Let's see what's left. £46,400. So what am I going to do with that? I would carry it back because once I've done my current year claim, in terms of priority, got to do that first, I can then go back and say, let's relieve it now against the previous period. And in that period, I've got a profit of 14,700 and I've got some interest of 1,800. So I can use 16,500 of my loss. That would bring my TTP down to 0. But it would mean that those donations are wasted because I've got no income left to set them against. But at least my TTP is down at 0. So 16,500 of the loss used in that period. That was the carry back. So I've got 46,400 left on the gift card before that. If I use 16,500 now, I've still got 29,900 of the loss left. And I prefer to tackle the loss questions, I suppose, in my own way, which means putting the pro forma together, going through from start to finish, thinking about what I would do and how I would make sure I use my loss as soon as possible. I find personally that trying to read through the questions and then work out bit by bit where I am in the pro forma can be a little bit confusing. So I like to do everything. I now know the full story of the loss from start to finish. The only other thing to think about is, well, what is the answer to the question? And the first thing says, how much trading loss is claimed against income in the year December 2024? Well, there we are. The answer to that is 3,200. That was the loss that I claimed in 2024. The next question is how much of the loss is claimed against income in the year to December 23? That is 16,500. That was my carryback claim. How much loss is going to be carried forward? That was here. How much is left on the gift card? Well, you started with 49,600, you used 3,200, you then used another 16,500, 29,900 is left. And then how much of the charitable donations can be carried forward? And the answer is nothing. We don't get to carry those forward. They effectively get wasted. In both years, they're gone. We can't carry those forward. So I'm now just going to put my answers into the boxes as I've just shown you there. I didn't want to be scrolling backwards and forwards, so I thought it was easier to run through the answers and then update them at the end. You may find that you actually prefer to read through the questions and then try to find the answers. I just like to get my full pro forma together, know that I've done it, know that I'm confident about what I've done, and then I can answer any question because I've worked through the entire loss pro forma and I've worked out everything that I might need to know. So that's my preferred method. So 5 marks for that, 5 different boxes, that makes sense. And now Ruby. Ruby is a sole trader. Her business sometimes makes a loss. Up until now, it's been her policy to claim tax relief as soon as possible, but she'd like to know if there's anything else that she should consider. 3 marks. And there absolutely is. There's actually 3 things that I think Ruby should consider. I'm just going to put them one by one. So the first thing I think she should consider is the rate of tax. So by claiming the loss relief as soon as possible, she might be claiming only at the basic rate. Maybe if she chose to carry forward, she might save tax at the higher rate. So the taxpayer really, or Ruby in this case, should aim to save tax at the highest rate. Which may mean a carry forward claim is preferable. If we think we're going to have higher earnings in future than we've had in the past, we'd rather carry it forward and save tax at 40% rather than saving tax at just the basic rate. So it all depends on the situation. But the point is we want to save tax at the highest rate. Cash flow is another consideration. By doing a loss relief in the current year, we can mean that we've got no cash to pay out. So a current year claim avoids having to pay any tax. And for a sole trader, their choice of loss relief is that they can do current year or carry back, or they can do a carry back and then a current year, or just a carry back on its own. We can absolutely mix and match these. There's no set order, and you don't have to do one before you can do the other. And a carry back claim is also a really good thing, because a carry back claim means it would get a refund. So a cash refund would come from HMRC. So that's got to help the cash flow, hasn't it? Carrying forward actually creates a lot of uncertainty because there's no guarantee that we're even going to make a profit in future. So we might carry it forward and then never make a profit again. So that could be a 4th point, but it actually only wanted 3. So I'm going to go with my next favourite one, which is the consideration of the personal allowance. So every individual gets a certain amount that they can earn before they have to pay any tax. We call it a tax-free allowance. So every individual has a tax-free allowance each tax year. So there is no need to use the loss to reduce the income in years where the income is below the personal allowance already. And this would affect the current year and the carryback claim. Because we've got choices there. We don't have to do either. We can do just a current year, but if the personal allowance covers our current year, don't bother. So we could do just a carryback. But if the personal allowance already covers the income in last year, don't bother. So you don't need to do them if the personal allowance covers the amount of the profit that you've already got there. And if you don't do a current year or a carryback, then you'd end up carrying the loss forward. So that's the third consideration there, the personal allowance. Okay, and there we go. That brings us to the end of that question. So I hope you found the pro forma useful for the first part, and then a little run through there of the different considerations really from a taxpayer's point of view. So if you're enjoying the sessions, please join me for the next one where we'll have a look at task 10.